everyone, welcome back to Web3 Deep Dive Podcast. I'm your host, Rachel Wolfson. In today's episode, I'll be speaking with Jonathan Bander and Robert Cannon. They are both tax professionals at ExperityCPA, which is a firm that helps people with their crypto taxes and planning and so much more, which you guys will find out about in this episode. Before getting started with today's episode, please also take the time to like and subscribe to the channel, especially if you enjoy the content that you're seeing today. I definitely want you guys to stay up to date, so this would mean a lot to me. Okay, before getting started, I also want to take the time to thank the sponsors behind Web3 Deep Dive Podcast. Thank you to VeChain and VBetterDAO, which is a sustainability-driven dApp ecosystem built on top of the VeChain Thor blockchain, aiming to promote Web3 adoption and incentivize actions that contribute to meeting the UN's 17 global sustainability goals within Web3. Without further ado, let's get started with today's episode. Hey, Jonathan. Hey, Rob. How's it going?
Good. Hi.
Great.
Cool. Thanks for joining the podcast today. So before getting started, our listeners would love to know a little bit more about you both. So Jonathan, could you maybe give us an introduction, and then Rob will go into you?
Sure. My name is Jonathan Bander. I'm a CPA. The name of our firm is ExperityCPA. I've been doing taxes for almost 25 years. Always doing alternative investments, and I have clients, and mainly business clients, and also all the owners throughout the US and internationally. And I've been in the crypto space handling taxes and tax strategy for I think I'm either through the third or fourth crypto winter now, so I've seen a lot. And I'll let Rob jump in, tell a little bit about himself.
Sure. My name is Robert Cannon. Been in the space for 33 years, the financial service space, wealth manager, tax strategist. With Jonathan, we basically run a virtual family office structure. Everything's under one roof. So we look at your taxes. We look at your finances in terms of wealth. And we also look at your legacy, and what type of legacy you want to leave for your heirs. And we do everything under one roof. But we're
Great.
very tax-centric firm.
Wonderful. Well, that's good to know, because today we're going to be discussing crypto and taxes, a topic that a lot of people, I think, struggle with, but it's one of the most important topics in the industry, I think.
It's definitely a hot topic now as we head into, hopefully, a long bull run. We'll see what happens. But obviously, as we enter this current bull run, we've all hopefully enjoyed for the first quarter of this year. Definitely much more of a popular topic. So with respect to crypto and taxes, as I always said, Rob, it's important to have an understanding of your entire situation. And sorry, were you going to say something? Or?
Yeah, no, I mean, I think this is a good way to lead in, just to what are the basics around crypto and taxes that every crypto holder in the United States should know about. Let's start with the US, because we're based in the US.
Correct. So first things first, presently, crypto, I just want to say out loud, is property at the moment. And we'll talk a little bit about the wash sales in a second and what that means for crypto. But right now, on a very basic level, everyone should be keeping track as best as possible of their crypto transactions. Everything is reportable in one fashion or another, and it's important that people are kind of aware of everything they're doing and keeping track and have a system and a procedure and a process in place for all of their crypto transactions.
We answer a lot of basic questions. Sometimes people will say, hey, I got Bitcoin, but now I'm going to switch out Bitcoin to Ether. So it's not a taxable event. Of course, that's a taxable event. When you go from one to the other, that's a sale, right? So that's a taxable event. And sometimes people get confused with that. Or it's going into my wallet, so I don't have to pay tax on that. Yes, you do have to pay tax on that. And people need to understand the ramifications of not reporting. Right on the beginning of your IRS tax return, have you received digital
currencies?
Bitcoin, right?
Yeah.
So it's right there, and it's on the first page, and there's a perjury on the bottom. So you're basically lying, and you have to disclose everything. So people need to disclose what you have and just find the right way to mitigate your taxes.
One one thing I want to jump in and say is, as I mentioned a second ago, it's important for people to keep track and understand what they're doing and have a system, a process, and a procedure in place. But really, everyone that's doing a lot of trading or even long time hodling should really be talking with a CPA and a tax strategist and potentially coming up with a structure or something in place to understand what the tax implication of what they're doing is. And certain tax structures help with mitigating the tax and tax deferring their taxes. So it's important really for people to plan, I should just say upfront.
Mhm.
Talk to your tax professional, find out what they need, keep track of your reporting, and hopefully they could help you set up a structure that really helps you in the crypto space.
Got it. Okay. So first things first, people should plan ahead, set up a structure. Also, Rob, as you mentioned, I think this is also very important for people to know that switching between Bitcoin, Ethereum, different cryptocurrencies, that is considered a taxable event.
That is a taxable event. And if you do it short term, that's short term taxes. So that means you pay a higher tax rate. If you hold it for longer than a year, it's long term. So a lot of times we get people to trade that realize they're creating a lot of taxable events. So it's important to understand from a perspective of sale, like Jonathan said, we will elaborate later on about wash sale rule, but the reality is you're creating a taxable event and taxes will be due at the end of the year.
Mm-hmm. Now, for instance, if you're swapping between Bitcoin and Ethereum, but not putting that into your bank account, not putting that into fiat, it is still a taxable event.
That's correct. Think about it like this. Like if you're buying IBM, but you're selling IBM to buy Google, even though you still own the two stocks, it's still a taxable event,
Okay.
right? So it's interesting because we field those questions all the time. And like, well, I went from ETH to Bitcoin. I shouldn't have to pay taxes. You do have to pay taxes. Absolutely.
To that point, also, many people believe if you're receiving staking rewards and they're only going to a ledger or to a cold wallet or even a warm wallet, if you don't convert it, people think it's not taxable. The reality is it is taxable upon receipt, similar to interest income that you would earn at a bank. And an issue that a lot of people run into is the market's very volatile. They receive staking rewards, and then you have the risk of the market coming down. So you've received it at a high value, and then you have to pay your taxes, and your staking rewards are worth a lot less. So planning for that and structuring for that is another thing we do ongoing very commonly.
So let me get this straight. So let's say I'm earning staking rewards on a Bitcoin that I have in a ledger.
Yep.
And basically the taxable event happens at the time the rewards hit that ledger account. So even if, the price is down, it doesn't really matter because it's recorded at that certain price. Is that correct, Jonathan?
That is 100% correct. That has
Okay.
right now, not such a concern as I'll call it in a bull market or we're holding steady. But if everyone remembers from 2020 and 2021, when we were in an incredible bull market and then it really came crashing, people earned a lot of staking rewards, and then we went into a deep winter and within the same year, and that was very, very impactful to a lot of people. So speaking with CPAs and coming up with a strategy for that, of maybe taking some risk off the table in a tax efficient manner, is very, very valuable. Could really help you down the road as you head into doing your taxes. It could be helpful. I know we're going to talk about the wash sale rules that are potentially coming to the crypto market down the road, but here we're talking about just an example, trading and the requirement to report all that, et cetera, et cetera. One thing that everyone's familiar with, and I'm just going to use it as an example, is a 401k or an IRA or so on. And what that really is, we can refer to as what's called a wrapper. A wrapper. So think of yourself, you have a 401k, an IRA, anything else, and you're trading inside of those accounts. That's all tax deferred. So you don't need to actively be reporting those trades. So the 401k or the IRA acts as a wrapper. So something we do ongoing is we come up with structures, we make recommendations that help people wrap their activities in order to help minimize taxes and tax defer them and deal with the reporting requirements, compliance, and all of that stuff. And I think that'll come more and more important as we head into, hopefully not, but maybe dealing with the wash sale trade rules that are coming up. Yeah.
Let's take a minute to talk about the wash sale trade rules. Okay, so right now, and correct me if I'm wrong because I'm not a tax expert. So right now, there's not a wash trade rule for crypto taxes. Is that correct?
That is correct. Currently, right now, it is not considered securities, not considered equities. It's considered property. And the wash sale rules do not apply to property.
What is wash sale rules? Let's take a step back.
Sure. So in a very simple definition, the wash sale rule says if you sell something and then you buy it back within 30 days, you basically skip that transaction inside of the 30 days. So in crypto, especially as we came down out of the bull run, people wanted to sell, lock in losses, and buy back their coins. That presently is allowed. In the stock market, if your stock is coming down and you sell it and you lock in a loss and then you buy it back and it goes back up again and then you sell it and that all happens within 30 days, it's as if the sale never happened. They wash it away. So they call it wash sale rules. They'll ignore whatever happened within that 30-day window. You have to be outside of it 30 days. So you'd have to sell it, wait 30 days, lock in those losses, and buy it back. Okay. And a lot can happen within those 30 days, as we see. So they're trying, in the new bill that's coming out, they're trying to introduce that and get that into the crypto space.
Mm-hmm. Why do you think that's the case?
Taxes is the case. They want more taxes. Is exactly it. It's a really big benefit right now. A lot of people take advantage of the volatility of the market. Just today, Bitcoin, I was primarily looking at Bitcoin today. Bitcoin went down 8% today, and then it bounced back up. I think it's down 4% now, but if you were a trader, you could have sold that, locked it in very quickly. So they force you. Taxes. Yeah, you could have sold, locked in some losses, bought it back, sold it off, and your gain would offset your losses, and you'd make profits. They are trying to curb that. They want to collect more in tax. Taxes is the root of everything.
Right.
Ultimately, the government needs revenue, and that's what they want. So they're trying to, everything in the new proposal coming forward are proposals to increase taxes. Many in the crypto space, as it becomes more mainstream or more accepted, or more, it feels like they're pushing it out, but I'll say more accepted or more adopted or allowed in the U.S. They're trying to now accept it in order to apply taxes to it. That's basically it. They want more taxes out of it.
You answered my second question is why now? But I think you're exactly right. It's we're seeing mainstream adoption, we're seeing institutional interest, and the government is thinking okay, cool, we can start taxing on this. So I think you're exactly right there.
The government wants to make money off of it. It is something that is popular. It's beneficial, and it creates revenue, and the government, as everyone knows, this is not a secret, us as a country, the United States, is in a large amount. We have a huge deficit. Part of how that gets paid back and funded is through revenue, which is tax dollars. And there's obviously a fair amount of economic instability going on, all sorts of stuff around the world that all has to continue to get funded. The government needs more revenue, and that's really only done through two ways, which is increasing of taxes and printing more money.
Definitely.
The
Go ahead.
I was going to say, in the crypto space, we like when they print more money and devalue the U.S. dollar, but the government is printing more money and increasing tax dollars. So that is unfortunately what we're living in. Sorry, continue.
Yeah, I mean, it's counterproductive, I guess, if that even makes sense. Is that the right word? Yeah, that's interesting that you say that. Growing up, so my dad is a tax lawyer, and I'm horrible at taxes, but he's a tax lawyer, and he always told me there are two things in life that are certain: paying your taxes and dying.
That's true.
Yeah, that was like his favorite line that he would tell us as children. I was traumatized growing up. Just kidding.
What has changed in our lives is my mother, everyone would always say, you can't take it with you. Well, not only can you take it with you in the crypto space, many people we find want to take it with them to help the remaining community, pop up their value, increase their value. But that has also changed.
Right.
Death and taxes and that.
Right. Speaking of taxes and newly proposed rules, and Rob, maybe you can talk about this, or Jonathan, you can. The crypto miners, there's a proposal in Biden's new, 2024 budget proposal thing about a 30% tax for the crypto miners. And I'm assuming, and this is the same case, they want to tax the miners because they want to, more money, obviously. So can we talk about that? Do you guys know what's happening there?
I could jump in a little bit, and then I'll kick it over to Rob. So just one misconception about it, and then I'll jump right into it, is that it's not a tax on the miners, so to speak, on their revenue. It's a tax really on their electricity and the usage of electricity for their industry. It's not 30% right away. It's proposed as there's a phase-in. I believe it's 10%, 20%, and then 30%. Not nice, not pretty. No, it's another tax. It's an excise tax. I don't like it, obviously, because I don't like anything, I call it like anti-crypto or anti-digital in the US. It definitely impacts us with respect to other markets that are much more giving tax breaks, I should even say, or tax-free to people in the space, because it produces jobs and revenue in other ways and so on and so forth. So I don't like it because obviously it is a tax, and I don't like the way it might impact the sector, the industry of mining in the United States. But right now it is coming as a tax. Electricity, not even electricity, energy is becoming more efficient as we go forward. So hopefully, as energy becomes more efficient and more cheaper, it'll help curb if that does come into effect. But definitely a concern. And again, that's why we look to tax structure to at least help the miners help on the revenue side with taxes. We could decrease taxes on the revenue side significantly. We could help offset some increases in taxes on the expense side.
Mm-hmm. Rob, did you have anything to add there by chance?
I wanted to go back to the wash sale rule a little bit, because there's things people can do to get around that if that comes to fruition. We have clients that will open up what's called a traditional IRA account, and you can trade crypto in your IRA account. And a lot of people don't know that you can do that. It's called a self-directed IRA account. So if you get a regular IRA account and go to a major firm, right, a big firm, they're going to have you trade stocks and bonds. But if you have what's called a self-directed IRA account, you can actually trade crypto in your IRA account. And when you do that, you're not subject to those wash sale rules. We also have people set up what's called a Roth IRA. If you do it inside your Roth IRA, your proceeds are completely tax-free. So this is something that you should speak to competent CPA or tax strategist and circumvent the proposal for those wash sale rules and try to get your profits tax free.
Correct. I also want to say the tax freeness is that specific vehicle is a retirement account. So just keep in mind it's tax free at 59 and a half. But ultimately, it is very important that everyone does tax planning and tax structuring as soon as possible. The longer you wait, the harder it is to kind of, as your assets grow, it's harder to get them into an efficient vehicle. You want to get it in and grow it inside, again, inside of a wrapper, such as a traditional IRA or a Roth or so on.
Jonathan, let's talk a little bit about tax planning and strategy because you keep mentioning this. Can you provide just some specific examples and also examples about how you guys, would do that with your clients that hold crypto?
Sure. Should I jump in, Rob? You want me to? You want to jump in? Should I jump in?
Yeah. Just talk about the trust.
So we utilize a number of different structures. We definitely love certain retirement accounts, certain pension accounts, as Rob was just mentioning. Definitely don't mind IRAs, don't mind Roths. Rules with those have changed in recent years, so they're still beneficial, but there's things to be aware of. Other things we like to look at is there's a handful of different types of trusts that allow you to place appreciated assets and get a tax deferral on the event. So let's say you are fortunate enough to get into a great new project, buy some new tokens, and you have a 500X. Tell me what that token is before you get to the 500X. But let's say you have a 500X. If you cash that out without any sort of a wrapper or a vehicle, and you're living, I live in New York, I live in New York City, I'm looking at a 50% tax. It's brutal between capital gains, New York State, New York City. If I contribute it to a certain type of trust structure, I have the ability to exchange it, take risk off, sell it, swap it to Bitcoin, buy a house, an investment property, any other investment I'd like to buy, and I'm able to defer that tax event. Without getting too complex, it's an actuarial calculation that determines exactly how long you can defer it over, but it's really anywhere between 20 years and the rest of your life. So that gives people the ability to, let's say you sold $1 million of something and you had a $0 cost basis. Instead of me, as an example, getting hit with $500,000 in tax, I might only pay tax on 5% of it, $50,000, and defer 95% of the tax. That's one thing, is a series of trust structures. The second thing is utilizing insurance. We utilize different life insurance type policies, structures, in order to use that as a wrapper. Without getting into the details of it, many people might have heard of private placement life insurance. Once you get into it, inside it, you're able to grow tax-free, ultimately borrow against it, and it can go to your heirs tax-free. What was the other structure we were working on recently?
Those are the two that I feel we, and obviously the Roths is obviously tax,
And a lot of crypto people are actually familiar with opportunity zones and the buying and selling of crypto. There's something in the real estate world called a 1031. And that's when you buy one piece of real estate and within certain timeline and other rules, you swap it for another piece of real estate and you defer the gain. In the crypto space, if you sold your crypto and you received the money, you were able to reinvest it into what's called an opportunity zone, and it gave you the ability, or an opportunity zone company, and it gave you the ability to defer the gain. That still exists today. So we set up and help with people looking to invest in opportunity zone companies, opportunity zone real estate, and so on. So different structures, many different structures that help people defer and hopefully eventually eliminate their taxes.
Yeah.
One important thing about the OZ fund, if right now you're deferring taxes for 3 years, but your cost basis after a 10-year period, anything above that will be completely tax free, which is a great benefit for a lot of Bitcoiners. This is a
Yep.
great opportunity to allow that money to grow, completely tax free.
And some structures, without getting really too detailed, some structures you can bolt together and you can have the best of both worlds. So depending how much the client's gains are, depending on their net worth size, how old they are, what are they looking to do in the future, yet have to plan a structure that really kind of works backwards. Look at your goals, look at your objectives, figure out a structure that'll help you get there, and mitigate your taxes, reduce taxes, and hopefully get you tax-free in the future.
Yeah, it's interesting. I mean, you're saying things that I never would have thought about. I know about, the taxes and you have to report the things on the taxes. But in terms of planning and all these different strategies, it's really interesting, especially for people that hold crypto. I mean, I've been holding crypto since 2019. I haven't sold my Bitcoin, which is great, but it makes me think like, well, I should have a plan because I'll eventually sell the Bitcoin. And now my only plan is, well, if I sell the Bitcoin, I could buy real estate. But, there are going to be consequences if I just sell it outright and buy real estate. So I think everybody listening really needs to take this planning into consideration. I mean, I am.
Correct. And many people... Go ahead, Rob. Go ahead.
I was going to say, what you can do, you can utilize a self-directed opportunity fund. You can sell your crypto and then go into the real estate that you're looking to purchase. And if you hold it for longer than 10 years, you can have all of those gains over your basis be completely tax-free.
Yeah, it's interesting. Yeah. I would have known.
Definitely, there's that old expression which holds true, which is like people don't fail to plan. They don't plan to fail, they fail to plan. So really having a plan in place is important. A lot of people that are longtime hodlers, it sounds like yourself, their plan is really eventually crypto's going to get so, and I think we are on the way there, but it's going to get so mainstream, widely accepted, I'll just borrow against it. And that does exist, but as we've all seen, a few of the companies that people were placing their crypto and borrowing against have unfortunately gone out of business in the latest winter. Right. So there's risk in that. So I'm not saying that's a bad idea. You can borrow against your holdings, but there's certainly risk in there. As it becomes more mainstream, some more secure institutions may allow that to be done. I could certainly see that happening in our country. But yeah, certainly important to talk to a professional in the space, a CPA in the space, someone that's been doing it a long time, understands complex tax structures and can really guide yourself in setting up something that will work long term. Like work backwards from your goals again. Work backwards and plan accordingly. Set it up.
Right. It's interesting you mentioned about borrowing and the platforms that we saw go under. There was one point in my life when I was thinking about using Celsius to buy real estate, right?
Yeah,
and
exactly.
Having them give me some sort of a loan or whatever. But anyways, good thing I didn't because Celsius went under. But it's so true to take that into account is the risks associated with these platforms. Yep.
Definitely. It's a big concern of mine. I would rather people, if your only reason for doing that is to not pay taxes, there's a much less risky way to do it than just borrowing it. That is an easy way to access your coins or your tokens without triggering a tax event, but it really is. It really could be quite risky. At least right now, it's definitely risky.
Yeah.
The purpose of VBetterDAO is to become a vast sustainability D-app platform and onboard millions of daily users in the coming years. This directly benefits VeChain tokens, VET and VTHOR, also known as the protocol value layer and the gas token. All activity on chain benefits VET. This is VeChain creating a new pathway to driving mass adoption alongside our enterprise initiatives, which, yes, continues, of course. What is better? Better is the incentive token. It's paid to people, apps, and the treasury. What is Vote? Vote is used for casting votes. For apps, community proposals, and treasury requests. It's obtained through a one-to-one swap with Better tokens. Join now and be better.
So it's interesting when you're telling, you guys are saying all this information, which I never knew about. How is it? And I think a lot of people are in the similar space as I am, where they know you have to pay taxes with the crypto now, but they don't know other things because there's a lack of clarity, I think. Yeah. How is it that you guys know all of this information? Like, are there documents out there?
I've watched 1,000 people make 1,000 mistakes, and no. One thing I do want to say is right now we're in tax season. We're doing this in early 24 Q1. We're in tax season. We ended the year in a bit of a bull run. People sold off. They had gains. I do want to say it's very hard now. We're trying to resolve and help people with last year's tax problems. So everything we talk about with structuring and setting up, you really have to do it on a go-forward basis. That is the most impactful. We've been in it a long time. I read about it all the time. I listen to other speakers talk about it all the time. Reading all the time. I'm watching what's coming out from the IRS or other governing bodies. Just kind of staying up to speed on it as best as possible. Trying to stay on top of it. Changing
what we learned from the tech industry, because we helped a lot of tech millionaires and billionaires basically save money in taxes, and now we're just doing that for the crypto route. A lot of the same techniques, to be honest with you.
Is the firm only focused on crypto, or are you also doing tech as well still?
So we are a full service firm with about 1,000 plus business clients, and it is not all crypto. We've been around a long time, have many clients that are not in crypto, but our crypto footing is growing quite handsomely and quite big. But out of 1,000 clients, it's 65% traditional businesses such as real estate, SaaS companies, tech developers, and so on, doctors' offices, all the traditional things you could possibly think of. But cryptos
are you focused on the U.S.? Sorry.
No, not all of it. But crypto is definitely coming on strong. I've actually, I want to say I could have maybe called this bull run. People should talk to their CPAs about calling a bull run because the amount of calls I received from new crypto projects over the last year was outrageous. It went quiet during the crypto market, and then it shot up with questions. Sorry, what was your question again? You asked me something.
No, I think that what you just said is extremely interesting, actually, that CPAs call bull runs.
I'm telling you, we can't call the winters, but I think we can call the bull runs.
Yeah, I was going to ask if you know anything about that.
The amount of inquiries of new projects we received was unbelievable. And I knew it. It was like one after the next. It was just starting to buzz again every time. And then boom, here we are off to the races. We are a US based tax firm. But really what that means is the entire US But two things, especially as it relates to the crypto market, if the founder is in the US, that it's crypto, it's international. So we have a lot of US based crypto companies that have offices in London, offices in Asia, offices in Africa, and we help out with all of that. What does that all mean for the US tax system that they have to comply with? Also, a lot of new crypto companies where the US person has relocated to another country and started a crypto company. And then also a non-US person, a non-US company that has entered the US to do business here and set up a subsidiary. So when you ask if we're international, I would say yes. We have a lot of clients that are international. We're not filing international taxes, but we have a lot of hands-on experience dealing with international companies, international clients.
It's interesting. I wonder how many people, like what percentage of people are actually coming to the United States to set up crypto companies now,
Yeah,
if that's high.
We get a lot of
definitely.
people who try not to be honest with
Yeah,
you.
yeah. Definitely they're waiting on some opinions to come out from like the SEC and so on. They're waiting for some decisions to be made. No one wants to get really caught up. There's definitely way more interest in getting out of the U.S. than coming into the U.S.
Right.
It's interesting. It's interesting
Yeah.
right now. It's interesting.
So this is kind of a non-tax related question, but because you guys have so much insights into the market, I'm just wondering, do you think we will see a spot Ethereum ETF in the near future?
I honestly say I think we will. I think we will, yes. I think we will. I think that we're going back again to revenue and taxes, and I think all of this is revenue makers, tax makers, and it'll definitely happen. I'm always surprised with the stance the U.S. takes on with respect to the crypto space. I think the U.S. always takes a long time to come around to anything, and they always kind of like shove it away before inviting it in. And I think right now, obviously, it's not a great environment. People are nervous about setting up, creating a token here. It's nerve-wracking. But I think ultimately, the U.S., as we can see through the ETF coming online, we'll start to see banks custodying coin for people. It's going to become more and more mainstream. And then I believe eventually the U.S. will actually become the safest place to trade crypto in the globe eventually. But it's a road to get there. It's a road to get there. So I think eventually the U.S. will be very inviting to crypto, and there'll be a shift. Whether that's in 5 or 10 years, I don't really know.
Well, I hope you're right, because I don't want to have to move offshore. I mean, I've considered it, but that, I don't want to. But okay, next question is, so I recently wrote an article and it went viral. It has almost 200,000 views on Crypto News. And it's about El Salvador and their Bitcoin holdings. It's impressive. Let's talk about El Salvador.
Yeah. Who's the I'm drawing a blank now, the guy that does the podcast, Max Krotman?
I think I know Max Kruger.
He does the Bitcoin podcast. Max. He's the main guy. He's an old school OG Bitcoin guy. He was a big advocate for El Salvador going on the Bitcoin monetary system. I think it's great. I honestly think that we have issues with our currency. There's issues around the world. We all know about inflation. We know how the currency is inflated away at a very basic level. If inflation is 5% a year, in 20 years, we're at zero. That dollar is worth zero. So Bitcoin, as we know, has inflation-proof stuff built into it. um, especially in other countries where inflation is just outrageous and out of control. I think it's great. I think it's really fantastic. I think it'll bring peace and prosperity to El Salvador. I think we're going to see other countries adopting it. I think we're going to see more and more companies and countries using it as the reserve currency, their treasury. The value will continue to go up. I don't see demand going down anytime soon. And there's a limited supply. It's supply and demand. And there was the there was a Taproot upgrade to Bitcoin. I'm drawing a blank now, about a year and a half ago. That's just starting to really, I see it coming on strong in full force now. The things that were implemented then. My point is demand is increasing. So I think it was great. I think it was really great. I think El Salvador will be
And Jonathan,
very well off.
We always have to always be careful, because whenever we say, hey, El Salvador is doing amazing and it's been hugely popular and productive, we get, emails from people wanting to debate us on why it hasn't been that way. But I believe, Argentina, right? We look at what's happening now in Argentina and El Salvador. I think we're going to see more countries actually adopt Bitcoin, in my opinion. So let's see what happens.
It's as we all know, it's a fixed supply. There's no way to inflate it away. Do I think currencies will disappear? El Salvador is interesting because it actually ran on the U.S. dollar, but other countries have their own currency. Do I think that will completely go away, and will everyone just be transacting on Bitcoin? I don't really think so, but I do think it'll become a major treasury reserve, which the U.S. dollar has been for a very, very, very long time. But I think we'll see. I think we'll see a shift. I think we'll see a shift, and it's had benefits, as you can see, for El Salvador. Their unrealized gains or realized gains are quite large at the moment. We'll see what happens.
It's like what Tim Draper said on the podcast. This was another thing that went viral, was El Salvador could become the richest country in the world 5, 10, 20 years from now because of the Bitcoin that they're holding.
Correct.
It's incredible. I forget how much they have. It's a lot.
It's a good amount, and he was buying through the winter too. He was he purchased a lot. I actually saw an article. I'm not going to quote it either because I don't remember how much they have, but it said something like El Salvador has X amount more Bitcoin than anyone even knew. Like it said, they have a lot more than people even knew. So I think for El Salvador, which is a small country and definitely had some financial issues, I think it was a smart, forward-thinking kind of choice. Look, he took a risk, and so far it seems to be working out very, very well for the country.
Definitely. I want to get you guys' take on this. So it seems like now that Bitcoin is, it surpassed, what was it, 73K or something. It's reaching new all-time highs. And when it was low, so are people buying Bitcoin more now that it's like crazy high versus when it was like, $7,000?
Well, FOMO is real. The fear of missing out is real. Yeah, Bitcoin is an interesting animal where when it's going up, people want to grab on. It's, they want a piece of the success of it. Many of our clients dollar cost average in. They just keep buying no matter what the price is. But certainly there's increased demand as it's going up, which is a very interesting in this asset class. We don't always see that.
And
Rob, were you going to add something?
Yeah, something that's happened in the last few months is that we have a new buyer. So now we have Wall Street. We have people common Main Street, right? People that are in their 50s and 60s that basically swore off Bitcoin. Now their broker, because of the ETF, will be able to expose them to Bitcoin. And we get people all the time coming in, hey, should I start buying this Bitcoin? Can I put maybe 2%, 5% of my portfolio in Bitcoin? So now we have a new buyer coming at a much higher cost basis, which is good for all of us.
Hmm.
So it's opened up the floodgates because of the ETF and Main Street, basically Wall Street people coming in. And obviously we get the benefit of that because our cost basis is much lower.
Bitcoin and the industry was retail first, which is very different than everything we traditionally had. It was everything we traditionally had was provided to us from institutions and banks. Crypto really was founded, call it grassroots even. I mean, it was all retail, and now institution is coming into it. I went to a number of different wealth managers many years ago, and I was always an advocate for Bitcoin. I don't like betting against Bitcoin. I don't like taking that bet. And I went to a number of wealth advisors and asked about what should be an allocation to Bitcoin. I like Bitcoin. I'm a bit of a Bitcoin bull, but what should be my allocation? And I don't know. I was hoping they were going to say 50%, something like that. Instead I got 0.5, 0.25, 0.1. But now one said 1%. But now, as it becomes now as an ETF, I think I saw Bank of America's FOMOing in, and another place is FOMOing in. It the demand's going to increase greatly, and I actually think that's great, really great for crypto in the U.S.
Yeah.
I honestly just think the more adoption from everywhere, the more acceptance from everywhere, the better. Let's just stop with the unknowing of anything. Let's just the uncertainty of the market in the U.S. Let's get it all out there and get it moving forward.
Right. I know we're running low on time, but Jonathan, I wanted to ask you this because you mentioned dollar cost average. A lot of your clients do that.
Yep.
So what does that mean and how can somebody do that? Because I think that's a really great way for people to get involved with crypto.
Yep. I mean, some people, we have a client recently, he's very, very wealthy, and he literally took all of his money and just poured it into Bitcoin. So he poured it in. It was over 100 million US. Some people just want to be in that position and they dive in and power to them. That takes I would have too much anxiety to do that. That takes real strength to do that and not look back and not worry and check it every day. Dollar cost averaging really removes the anxiety of worrying about the ups and downs of the market. Dollar cost averaging means you dollar cost average and you invest ongoing, systematically, regardless of where the price is. You just buy. I literally have mindset. I buy a little bit on a Monday and a little bit on a Friday. For some reason, I like the beginning of the week and the end of the week. I feel like, I don't know, I want the best of if people are selling off or buying in and the timing of it. But that has proven to be successful and in the long run for people and really produce some really nice unrealized gains for people. It's a really good basic strategy that people can implement.
And that's something that expertise CPA. I always think I'm mispronouncing that.
CPA.
Yep.
Yeah.
Yep.
So that's something you guys help with. Like if I wanted to do that, you could help with that.
Correct.
Dollar cost.
Correct.
Yeah.
And by the way, I don't recommend a certain percentage to anyone of how much they put into crypto. If somebody calls us and comes in and we talk about all of their tax situation, their financial situation, we're happy to make a recommendation, but there is no blanket number for everyone with how much they should be in the industry.
Got it. Cool. So, I mean, I could keep asking both of you questions because this is really interesting. And I think our listeners would agree with me because it's so important. But any final thoughts? And, we may do a part 2. Maybe we'll do a continuation. But any final thoughts for now that you want our listeners to know about?
You want to take it or should I jump in?
Yeah, just be proactive, in terms of your taxes. Understand there's a tax implication, for everything. There's mandatory taxes and there's optional taxes. So if you don't plan, you're paying optional taxes.
Yeah.
speak to a professional and have a
Yep.
game plan.
Speak to an advisor. Exactly. Speak to a CPA and plan. Do some planning. Do some planning. Don't
Yeah.
wait to plan. Yeah, it doesn't hurt. It's people call us all the time. I'm always happy to give advice. I don't mind.
Cool. Yeah. I mean,
Yeah.
because there's so much more that we could talk about. We didn't even touch on donations and how that can help with
Oh,
taxes, but we'll do a part 2. Maybe we can get the giving block on here as
would
well.
love
They
to.
can talk about the donation process.
Sure.
So if any of the listeners want to get in touch with both of you, or they want to get, more information on how they could work with you guys, how would they do that?
They can reach me on Telegram. Most of the crypto space seems to be on Telegram. My handle is CPA Crypto. So on Telegram, if you look up CPA Crypto, you could send me a message. And we have a website set up called cryptotaxkiller.com. Cryptotaxkiller.com. If you go to it, it actually leads to the firm ExperityCPA information, but it's easy to remember. They could also go to ExperityCPA.com as
Cool.
well.
Rob, are you on Twitter, or do you have any handles you want to mention?
Just email rob@expertycpa.com.
Cool.
Rob is on Telegram as well. I think he's Rob Tax Free. Is your Rob Tax Free on Telegram?
Nice.
So yeah, hit us up.
Cool.
We'll happily help people.
Yeah. Thank you both. This has been a real pleasure. And I hope this has helped our listeners. So we can do a part 2 another time. So thank you.
Would love to. Thank you for having us. Appreciate it.
Thank you.
Special thanks to 4 Labs Digital for producing Web3 Deep Dive podcast. I'd also like to thank the sponsors behind Web3 Deep Dive. You can click the links in the show notes to learn more about each of the Web3 initiatives from these sponsors. Finally, thanks to the listeners for tuning in. Please be sure to subscribe, like, and share. I'll see you guys next time.